Welcome everyone, I'm Pat Mitchell, and today we are going to be going over a live trade. I recorded this a couple days ago. It was taken on SPY, and I'm going to show you exactly how to take a trade long coming into a very valid support level. I'm going to be going into great detail. It is a trade that is about a 13-minute long trade. So we're going to play that. And before we get into that, I just want to say, if you are not subscribed, please get subscribed. And if you enjoy this video, please give it a thumbs up, as it does help. And if you have any questions whatsoever about this trade or other trades maybe that you've taken, don't hesitate to ask, and we will see you at the end of this video.
Okay, guys, I'm just getting set up here. Give me a second. I just got back home. SPY is sold straight off down into this first layer of support. I need the 554s, 544s, sorry. So I'm going to start tapering in. Little late to the party. I really wanted that confirmation. Now it can slip a little bit lower. We do have that 50, but with the amount of sell-off that we have had, I want to point out a couple of levels here. So we have that level. That is the first layer of support, and it's sold straight off into it. And it's been starting to slow down. So it's really interesting. I'm going to move to a bigger chart for you guys. So if it pulls back again, this is where I will average in. There is a big retracement, probably somewhere in this neighborhood at a minimum. That's where it tried bouncing before into this old previous gap fill. There's a volume zone right in that area. I really don't want it to bounce right now because I did not get a big enough position. But usually when there's this level of weakness, you will have multiple opportunities and multiple confirmation points. So normally I would start in with 100 contracts, but because it still has this level that it could potentially come into, that's kind of right at its, and it did bounce off of that. Now there is its ultimate range, which is way down here at 539, but I don't believe it's going to need that. So we may get one more test of this level. So if it does, as it pulls back into kind of this trend area, I will average in more. So next red candle, I will hit it some more because I have a very small starter position so far. And I would like to accumulate size. Because this is one of those trades where it's just worth it. It's worth it. It's worth the loss. The relationship between distance and retracement is a big deal. Now we need to take a look at this. We have the previous close. So from where it closed all the way to where it sold off. That's almost 2% and 10 points straight down with no retracement. It has not retraced yet. So as it comes down, I'm going to add in some more. So again, I'm just at that one actual starter size position. Now, normally I would look for a big retracement, but because I'm trying to capture a trade here for you guys, I'm really just looking for it to come up to range, which is somewhere in this neighborhood. And then you can always check after the fact and see how it played out. But these are the types of trades that I absolutely love. When you have an opportunity like this, don't be afraid to take it. Yes, it can continue to sell off a little bit further. There is a secondary level down here, right? But you can tell that the action is slowing. It's 1 p.m. Lunchtime is over. We should start seeing some, and I'll never chase it up to get my size. I will only wait for dips. Because remember, I would like to acquire size in this position, right? So as it comes up into trend, I do need to pay myself. So I will pay myself into trend, right? But because lunchtime is over, there is an ability to squeeze. So down to 75 contracts now in the position. It should still. So now what I would want to see in relationship to natural movement theory, this is our next level. So it's either going to hold this or this, one of these two levels. And as it comes back down, you could add here, but I would be way more comfortable adding here just because it's lower risk. So if it gives me this level number 1, which is this, and then level number 2, if it only gives me level number 1, I will not add. And if it wants to squeeze to here, I'll take that trade off because it'll be most likely another opportunity. But if it does pull back, I will not add at level 1. I will only add at level 2. Right there. That's where I want it. You got to get really picky with this stuff, guys. Remember, I want it here. Right into it. So I'm going to take that. It's a perfect add right into natural. And it can come lower. That's fine. But that's where I want to start acquiring some size. And this is why, like, anytime you look at my entries and these entry charts, you're always going to see bottom tick entries, like the lows of those candles, because I'm going right for natural. This is proprietary to Trick Trades and my method, my strategy. It's the way that I read price action. It's probably the easiest way on the planet to read it. So you can tell that there's volatility here because lunchtime is over, volume's going to start increasing. It's kind of working this trend right now. So sometimes what they like to do is they like to smack it below a small little 1-minute trend to freak out retail investors and traders because they never have any proper stops. It's just all on pure emotion. So that doesn't freak me out. I'll take the opportunity to add. There we go. See if we can start getting, because you can see that somebody's definitely buying this dip down here. They're starting to accumulate size in the same place I'm accumulating size, just on a much grander scale. And this is one of those trades that, let's say it doesn't work. Well, okay, I just wait for the next level down. Because I don't have a super amount of size, right? Because this isn't where you want to apply a gross amount of pressure, right? You want to save that for lower levels. It's just about to take some off. That's all right. So right now, my eyes are just right here and right here. I want to see it hold this natural area. I'm going to take some off. Like I said, it's going to give you guys plenty of opportunity down here. And I want to talk about, you know, the relationship between distance and retracement. It's something that I mentioned earlier in this video, and it's something that's like really grossly overlooked. And what people do is, you know, they'll kind of look in the wrong areas, or they'll get spooked out. Let's say they're in this trade and it wants to come down a little bit further, right? Let's say it breaks this level by like 50 cents or even by a point at this point. What they're not looking at, they are not looking at the relationship between the distance it sold off and the retracement that has happened. There's been no retracement yet. There's been no run back up at all. It's been straight sell off for 10 points. That's a big deal, folks. Your odds dramatically increase. And this is why I wanted to record this video. It's like, it's almost an absolute given. So I'm going to pay myself some more, have 75 contracts left. I will take off a nice chunk here, but we're starting to get over moving averages. So right now, what I would like to see, I'd like to see it push, and I'd like to see it push past this. And then as it comes up, it'll come to here. And then it's either going to pull to here or all the way back to that 50 or this range. That's where you can get an ad, because there's quite a bit of volume down in this area, creates that block. Plus there is that level here. And that's why it stopped there, right? Finds the first level of natural, second, third. Like I said, you could literally set your watch by natural movement theory. And there we go. So starting to pay myself nicely here. Absolutely fantastic trade. And I'll save small for the run up, and that's it. So locking in $2,133.93. Absolutely fantastic trade. I think you guys get the point here. I don't want to keep you guys too long. I do have 25 contracts left. I will just see the rest of this trade out. And if I get stopped out the rest, I get stopped out the rest. It may chew my profit back by about 500 bucks if I let it stop me out. Or as it runs up, I will continue to pay myself into key ranges. Every resistance point up, I will pay myself, guys. And as it squeezes up, I definitely want to take advantage. So I just paid myself again. If this wants to continue to really squeeze here, I'll take full advantage of it. And I'll leave very small on for the run up to here as my target. Right in this area would be my target, guys. Like a greedy target. And another thing before I wrap this up, I think that's where a lot of traders, they really make mistakes, and they constantly look to get it way up here or way up here or way up here on the daily chart. That's not what day trading is, guys. Day trading is about taking very short-term opportunities with high odds of success and seizing that moment, getting in and getting out, making your money, paying your bills. Because right now, as of this moment, I've locked in $2,430.36 just on this one trade today.
Okay, folks, well, there you have it. I hope you enjoyed this. I hope you learned something. And again, if you didn't like the video yet, please like the video, please subscribe. And if you have any questions whatsoever, do not hesitate to ask, as I do take a look at the comment section. And we will see you on the next one, because I'm going to be doing a lot more of these live trade kind of rehashings and guided live trades for you guys, because I know that you do enjoy them. And it's just a little way of me saying thank you for all of you that support, like, and subscribe to the content. And we'll see you on the next one, guys. Adios.